What if I were to say that I think your real estate agent is going to possibly become the single most dangerous person in your life over the next few years? What would your response be to that? Now, in most cases, I don't think this is going to be intentional. It's not malicious, right? But let's face it, in 2020, back when things were still really good, the median pay for a real estate agent in the United States was roughly $49,000, and it was only $60,000 if you were a broker. Lowest 10% of that spectrum made less than 25 grand. The highest 10% were earning over $112,000. So while they drive nice cars and they wear nice clothing and they have great smiles, this is a pretty tough position to be in, and it's only going to get worse. In fact, I think we're going to see a mass exodus out of the industry as a whole because of what's coming. And I want to talk a little bit about how that's going to affect you as a buyer or seller as time goes on, because there's a real threat to you because of what's about to happen. Right now, in June of 2022, home buyers have dried up from the market, and it is only going to get worse. And it's going to make a big difference to you. Home sales have fallen to pre-pandemic levels at this point in late June. Buyer demand is expected to get worse and worse over the coming months and years. And new home buyer traffic is now down to the 2016 and 2017 levels. So I want to dive into this, Michael. Tell me a little bit about why we're looking at this industry and why we're concerned about the impact that this is going to have on the general population.
Yeah, and I'm seeing the same thing. Well, first and foremost, I think just historically for real estate agents, there's that 90-10 rule. So 10% of the agents, the top 10% of performing agents create 90% of the gross profit off of those sales. So what happens to that other 90%, especially with the market's going to be tightening up right now? You mentioned a couple of the tea leaves, which is what I'm always going to be looking at. How else can you predict what's going to happen than by looking at the past and looking at data points along the way? New homebuyer traffic is down to the lowest points since 2016, 2017's. Mortgage applications are at their lowest point in 6 years. Those are real numbers, and those do equate to what's going on in the market. I took a look at the growth rate of real estate agents in general. It's a subpar, less than 4% growth. So all of those things are leading to potentially the mass exodus like you're talking about right now. But it's a pretty dangerous time to be just taking full-on advice from realtors right now, because I don't think that they understand the gravity in many cases of what's actually happening.
Right. So I took a look at another interesting metric that really I haven't seen many people talking about, and that's the home tours and showings. The data through that, which is coming through Showing Time, it's an app that illustrates how many home tours are being presented. It shows that in California alone, since the start of 2022, there's been over 50% drop off in home tours and showings. In other parts of the country, you might see 31% drops. Well, that's an indication of who's around and wanting to purchase. And I think the summer and fall markets could be the roughest it's been in a very, very long time for both sellers and for agents. Let's keep in mind, though, that real estate markets are geographically isolated. I think that's important to continue to remind ourselves about. Some cities are going to be hit much harder than other places are. But we recently saw Jerome Powell coming out, and he's fully aware that the mortgage rates have moved up so much that if you're a home buyer, he came on record and said, if you're a home buyer or you're a young person that's looking to buy a home, you're going to need a little bit of a reset in order to afford current prices. And it's become obvious that these guys are supporting a slowdown. And it's not just here locally. Many of the central bank leaders around the world are echoing that a correction or even a crash is going to be healthy. So it is safe to say that monetary policy right now is tightening up, and buying is going to become harder and harder, and therefore the market itself is likely going to plummet. Buyer demand is going to plummet, and there will be an increase of that inventory that agents have so publicly bragged about for the last handful of years.
Well, yeah, as far as the lack of inventory, and that's what's been driving those prices up. But yeah, supply and demand, it's starting to really shift here. So it is turning into a buyer's market. The Fed has gone on record, obviously, from the outset within the last handful of months, and said that they're going to aggressively try and tame inflation. Well, they're doing that obviously by raising the Fed rates, which they did a 75 basis point hike just recently. That's astronomical, but that, to your point, that does show how serious they are about taming inflation. What that ultimately, the negative effect it's going to have is on that buyer's market with that increased, obviously, interest rates. It's going to be pricing people out of the market that are going to be a lot more, or that were a lot more payment conscious based on those interest rates. So yeah, that pool of buyers is certainly going to be drying up. So even if we're not necessarily getting a higher volume of supply, there's less buyers out there looking at the same number of houses, which is obviously going to keep that inflation low, but it's going to keep a lot of buyers on the sidelines as well. So it is kind of that perfect storm.
Well, and it's not even just your home owners, right? We're talking investors too. In fact, if you look at the home flipping activities that have taken place, it's been astronomical. In fact, it's downright scary. Home flippers made up more than 10% of the first quarter activities in 2022. And that meant that they were sold within 12 months of being purchased. That's typically how they're classifying a flip taking place. But areas like Arizona, North Carolina, areas of Florida, areas of Georgia, Atlanta area, the percentage of homes that were flipped were even much higher than that. In fact, they were above 16% and even above 18, almost 19% of their entire home transactions being flips. And what happens here is that when, it's very reasonable to assume that these areas could be facing some severe trouble in the coming months as a result of these flippers having fewer and fewer dollars available to them, and again, leaving the industry. If there's not enough meat on the bone, it's not worth the risk. You can get yourself into some serious trouble having even just one flip that doesn't work out the way that you want it to, which means that we're going to start to see those buyers no longer in the marketplace. And those were not just the investor flippers, but those were corporate housing purchasing that was taking place with the interest rates, like you mentioned, going up. We're going to start to see that huge pool of buyers exiting. 2 years ago.
I think particularly just with some of those cities that you mentioned there. So historically, when it does come time for the markets to dip in real estate, it's always going to start on the coast. So the east and the west coast, they're going to get hit the first, and they're going to get hit the hardest. So a city like Jacksonville, for example, that I actually live there part of the time, it's going to get hit hard. So investors that are had been active in those markets are a little bit more on pause right now, because like you said, the last thing you want to do is get caught big time with a market correction while you're mid flip. I mean, there's no better way to lose money quickly in real estate than getting caught with your pants down during a flip. So right now, particularly in those coastal cities, there's definitely, people are starting to get aware of that. They're being aware of that, and they're starting to, kind of sit on their hands a little bit more, or at least I would be for those reasons.
Yeah, and here's the thing. 2 years ago, we were sounding the alarm. We put out a number of different videos saying the real estate market is doomed. Obviously, we have no crystal ball and had no way to predict when the timeline would be, but it's just an easy statement to make, because eventually you're going to be right. Anybody that doesn't understand cycles, I think is going to fall victim to them. And the thing is, when you're dealing with data and you're dealing with history, it does allow for projections and predictions to be made with a fairly high level of accuracy. It was an unsustainable growth rate that was taking place, and it's see that a correction in some areas and a crash in others is imminent, period. And it's just a matter of time. So nobody knows exactly when it's going to happen or how long it might last, but we do know that those who struggle to succeed in the market are going to do anything that they can in order to stay afloat. And so we're talking about all different types of industry professionals here. And I remember in one case back then, a commenter called my opinions about the market being doomed eventually, and not me just saying, look, being prepared for the possibility of the market taking a dive or correcting itself or in some areas or crashing in others, whatever the case ended up being, and just being safe and sound just in case, he called it idiotic. He said this information should be banned from YouTube. Now, out of pure curiosity and after a glass of wine, I thought this has to be an industry pro, because this is the type of people that always come after me. Anytime I say something that is unfavorable about the market, the industry pros absolutely hate it. And I'm sure this video will have some of that as well. But I decided to look the guy up, and it turns out, of course, he's an agent, and he happens to be in Colorado. So I knew we probably had a lot of different people in common that we were connected to. I found him on LinkedIn. His number's sitting right there. I picked up the phone and called the guy. It was probably 10 o'clock at night. You know, maybe it was a little bit inappropriate, but I decided to just really get his thoughts and invite him on the show. I said, why don't you come on and share your viewpoints? It's fine if you think I'm wrong, but I want to know why you think I'm wrong. Well, spoiler alert, there's no video with this guy. Because of course, you know, he declined the invitation, no big surprise there. And everything he mentioned to me at the time, and he was a little rough when I called, he lightened up. I said, look, I'm not trying to confront you about this. I don't want to start some beef, but I just wanted to get your firsthand, you know, it's kind of this keyboard warrior stuff doesn't work real well for me. So he just said the inventory would show that it's not going to happen the way you think it is. It's not going to be some rapid decline. Well, here we are, and now everybody's talking about it. Maybe it still won't happen yet. Maybe we do still have another 2 good years ahead of us before it does. But we know that it's eventually going to happen in some capacity, higher in some areas, lower in other areas. Regardless, we know it's coming. So the prep work is really important. And I guess what I'm trying to convey here is, how much would the market have to drop before you look at a property you buy today, regretfully, 2 years from now, right? Is it 5% and you still say that's fine, I'm glad I bought it, because you're able to turn around and put it on the market and short-term rent it and make a lot of money during that time, and it was worth the price increase, the premium you paid? Maybe. Is it 20%? That's an answer that you're going to have to figure out for yourself. What I would tell you is you've got to be extremely careful who you're listening to.
Yeah, interesting story. Obviously, we get a lot of comments on here from folks. Too bad he didn't come on, though. We always are looking for differences of opinion, and of course, if they can support them, we're going to be all ears. What really kind of scares me about that, though, is they are an industry professional. So whether we're talking about real estate agents, brokers, lenders, anyone that's got kind of a dog in that real estate fight, if you will, they're going to be out there scratching and clawing. At least the good ones are, to try and hang on to their lifestyle, try to hang on to as much of that income as they can as the market continues or presumably starts to go down some. We're always going to be huge advocates of going out there, doing your research when it comes to real estate professionals. Obviously, getting referrals if you don't already have that relationship, getting those good references. You're always going to want to check those, particularly right now. Makes me think of a meme I saw recently, and this is a top industry luxury real estate professional that is a good friend of mine, and I've got a lot of respect for her business acumen as well. But she put a meme on social media the other day that kind of caught me, and it was, in that same vein, trying to push people to still go out there and get mortgages. And it said, you won't get a mortgage at 5.5%, but you'll get that BMW financed at 7.5%. Well, one's, maybe 50, 60 grand, depending on, what model of BMW you get, versus a mortgage that could be $500,000, $600,000, $800,000, $1 million plus. Those interest rates are going to add up more significantly when you're looking at a major purchase like a house. Not that a car isn't a major purchase, but obviously that's not an apples to apples comparison. So we always want to go out there and do our research, but be cognizant of that right now, guys. I mean, you always want to have people in your corner, but even those people can sometimes have maybe not sinister ulterior motives, but financial motives all the same.
Yeah, I guess the biggest takeaway from this video is just recognizing that not everybody is going to have your exact best interests in mind. And the more desperate people get, the harder they're going to be selling you on something. I would certainly give credit to our audience that you guys are sophisticated enough to not necessarily just listen to your friend, the real estate agent, who seems to think you should be buying a specific property and just jump at it because they say to. I think doing your own homework and analysis on those deals is extremely important and probably goes without saying, but I can't emphasize it enough that right now, it's extremely important that you're not just listening to anybody out there. You're going to want to try and find people who have that devil's advocacy approach try to poke holes in the deal, play the what if game. We talked a little bit on our recent video about having this situational awareness and just really coming into things cognizant of the possibilities of how this could unfold, and some of them aren't going to be as favorable and maybe don't seem as fun to review. We like to think about everything being a win, but what if it isn't? What if it's not a win? And if you do this carefully, it doesn't mean that it's not a good time to be buying. It just means you're going to have to be a lot more selective, and you're going to have to double check what those industry professionals are recommending to you with people that don't necessarily have that agenda or self-interest with a big fat commission check waiting for them at the other side of that closing table. I'd be really interested to know what kind of stories people have for us about their interactions with real estate agents or mortgage professionals. You have anything interesting to share, make sure you leave it in the comments section. Have you ever had a bad experience with a real estate agent? Do you trust your real estate agent? Have you seen people on Facebook that make it seem like everything is just perfectly okay out there in the real estate market? I do think it's pretty interesting as I surf my timeline and my feed these days that there are a lot of crickets all of a sudden. We don't necessarily have all those people who were just promoting constantly how great the market was coming in and now saying the truth about how the market might not be good. So keep in mind that it's kind of a one-sided opinion here when you're dealing with industry professionals. That's why you want to make sure you stay plugged into not just this channel, but all the other channels on YouTube where you can trust that the people are doing their homework too, and they're basing it on data. So with that, look forward to seeing you on the next video. Can't wait to read your comments below. Make sure and drop us a thumbs up if you don't mind. We certainly appreciate that for the algorithm. And until we see you on the next one, keep on cash flowing, guys.